I think, you know, the best way, you know, as Buffett has mentioned, the way to judge, you know, the management team is look at the growth in the NAV per share over extended period of time, over the cycle, right? So in that regards, what I can tell you is, well, let's say, let me give you some figures, right? To be more specific. In the early 90s, the stock has an NAV per share about 10. Today is about 180. So if you think of the so-called compounded growth in NAV per share, that is massive, right? I mean, regardless of what you think, you know, all this perception versus reality, right? But I think the numbers speak for themselves, right? And the other thing is, you know, when it comes to all of these in investments, right? I think, you know, some of your speakers mentioned about the capacity to suffer. And I think, you know, like a company like, you know, Cheung Kong or Hutchison, they have the balance sheets and the financial strength to take on projects that few other companies can take on. For example, if you look at Europe today, you know, the one reason I mentioned about the turnaround in the telecom business is because, you know, the company, unlike many European telecom peers, they have very high debt leverage, right? So when you know, settle, you know, the balance sheet of debt, you cannot spend money on capex, you know, and acquire, you know, spectrum, you know. But with the strong cash flow at the you know, Hutchison and Cheung Kong level, they can actually acquire new spectrum like 4G, you know, for example, they can roll that out, right? That's actually very important, right? That's why they're winning market share in Europe.